Hi there, welcome to our very last panel discussion for the day, closing with a ratings and a markets analysis of the budget speech. All eyes were on Tito Mboweni for this budget as investors sat on the edge of their seats for the upcoming, or rather do continue to sit on the edge of their seats for the upcoming Moody's rating, which prior to the budget that was delivered earlier today was suspected to be a downgrade. Has that changed? And what are the views of other ratings agencies to South Africa's spending and collection plans? Let us find out, because in studio I do have with me Kerry Finn, the CEO of Alpha Wealth, Tatonga Rusiki, the sovereign analyst at S&P Emerging Markets, and Adrian Saville, the CEO of Cannon Asset Managers. But before we get into the conversation, a quick look at the markets. Well, it is the question that remains on everybody's lips. Was the budget speech that was delivered by Finance Minister Tito Mboweni enough to avoid a ratings downgrade by Moody's? But not only Moody's, to avoid a further ratings downgrade from other ratings agencies like S&P perhaps. So who better to answer that question? Tatonga, you join us in studio, and we have to know from a ratings perspective your view on the budget that was delivered by the Finance Minister.
Thank you, Fifi. Thank you for the opportunity. I think let's put it this way. We last changed our outlook on South Africa in November 2019 following the presentation of the MTBPS. And the MTBPS was a weaker baseline than what we had. So what the budget has done now is to affirm the MTBPS baseline. However, that affirmation of that broad framework is unchanged, but it comes with different dynamics. Two dynamics. One is lower economic growth, which is now a reality, as well as the deficits that are higher reality. But the adjustment process is going to have to come from adjusting wages, the public sector wage bill, which leads us into the politics of the government, the politics of the ANC, the politics of the tripartite alliance. So broadly, the framework is unchanged from the MTBPS. So what it does is to give time to the government to, perhaps for us as well, to see how realistic the government assumptions are going to be. Can they get what they want from the unions? If they can do that, maybe that can help the fiscal framework, and that can help keeping the outlook for a longer period.
So unchanged possibly could not be a bad thing, Adrian and Kerry, to bring you in here, because we weren't only talking about a Moody's downgrade, we were talking about the possibility of upsetting other ratings agencies. So if S&P is saying that we're still neutral compared to our position there in November, is this a positive from you guys? Adrian?
I think the reading is pleasantly surprising, and the currency responded with wow, that was a bit of a rabbit out the hat.
So that was all down to the budget, it wasn't global factors?
Well, look, there were some afternoon factors that mattered, but if you look at the rand move, it was more than a market open in the Europe or in the United States. There was local factors going on. Having said that, the real elephant in the room is the 160 billion. And it's all good and well to talk about taking 160 billion out of the wage bill. Yeah. Let's see it come out.
Mm-hmm. Yeah. You don't sound confident that it will, but we'll probe you further on that. Kerry, just to bring you in on your views of the budget, and also the statement that has just been made by S&P saying that it's pretty neutral.
Absolutely, and that's good news, and I'm glad to hear that, and that makes a lot of sense. I mean, I think as both Tatonga and Adrian have commented, they're making all the right noises. Can you balance the needs of COSATU and the other unions, because that's going to be the big trick here, and the question still to be answered.
All right, so balancing those needs, I mean, the finance minister is saying that their consultations or talks are happening behind closed doors. The proof will be in the pudding. We'll wait to see. I'd just like to get your views on some of the announcements that were made regarding key factors in the economy. Let's just begin with Eskom and some of the changes there. All right, Eskom does get a bailout this time around, but there was quite a number of new initiatives put on the table there. Just your views on the government's plans to push ahead with its plans to restructure Eskom.
Yeah, I mean, from our perspective, we don't think that there are a lot of initiatives that are new on Eskom today. There could have been more. So we've been with the challenge of Eskom, I think, for a while now. If you are looking for more immediate radical reforms on SOEs, you can see the process that has gone on with SAA, with the business rescue. They immediately launched a process to cut routes and also to consider reducing employment. Right, that's more radical. And in a sense, this is from an independent party that is trying to look at financial sustainability. I don't think that some of the announcements made today actually go directly to addressing the financial sustainability of Eskom as yet. What is in place is to continue with the unbundling or putting into functional separation of units so that they can see the cost. So we are still kind of in the same ballpark.
Okay,
there are no new measures as such to try and make Eskom better.
All right, so what was reiterated was the fact that the bid window 4 and renewable energy would be accelerated, but not bid window 5 given more momentum. The IRP plan now, it's the national regulator that just needs to give that the thumbs up, and also municipalities who can afford can buy electricity directly from independent power producers. So you're saying that this doesn't move the needle in terms of Eskom's balance sheet?
I think in terms of Eskom's balance sheet, yes. But I think in the near term, the energy supply situation is still going to be a constraint. But I think it's a welcome issue that you can have more suppliers producing energy, whether it's from the IPPs or it's from whichever area that can come. That is welcome. But perhaps what is more, it's not just the production, but also perhaps if other operators can also use different channels other than Eskom, because all of that production will still rely on Eskom. So if Eskom can be sorted, it can help all of the new players that are coming onto the grid to help increase the energy supply. All
right, I must say, Adrian, Kerry, it is going to take some time to get used to seeing Andre de Ruyter there sitting in Parliament. I'm so accustomed to seeing him in annual general meetings or delivering statements at the JSC. But what were your views on some of the pronouncements made with regards to Eskom?
So with the SOEs more broadly, the thing that worries me is the whole is much bigger than the numbers that's been put on the table. Eskom needs much more money than the number on the table. So this is Band-Aid. It's not a fully fledged rescue. And why don't we know that number still? Eskom is a real drag on the economy. We're talking about a better growth environment, but it's hardly enough of a growth environment to get the ratings agencies to change their perspective on South Africa. I was going to say to get us off off our backs, but
we can be frank.
It's like a family show.
Yes, we adults at this table.
So, look, it's better, but it's not good enough. And if you wind backwards, the bailout money proposed over the next 3 years for SOEs is as much as was granted over the last 10. So these are big numbers that we're talking about, and it's great that the discipline has been brought to SAA. Now it's time for this great big single country risk in the form of Eskom. That entity has to be sorted out.
Kerry, I'm wondering if you actually had a peek at perhaps how the Eskom bonds reacted to some of the pronouncements that were made, and also your view on the plans for SOEs, Eskom, SAA, and I think he spoke about merging a couple of public sector entities as well.
Thanks, Fifi. I didn't actually look at the Eskom bonds, so I haven't seen how they've reacted. But
me too. I must do a bit of Googling.
Yeah, but I think just in general, it's the rhetoric is definitely pleasing to see that they're starting to take specific action. Okay. There are these measures of austerity that are coming in. I think Tito was his usual sort of candid self around that, and that was good to see. I think what everyone is crying out for now is action and detail, and everyone from the ratings agencies and all the way through to the market. Obviously the budget had a very friendly consumer element to it, that I think will bode well for business and consumerism sort of, within our country. But certainly, a lot of focus was put on reducing this expenditure bill, which goes all the way from how much money we're pumping into these SOEs, which I think is what the Finance Minister was trying to address, and all the way through to public wage bill, which I'm sure we'll chat about. But yeah, it's time for detail now, and it's time for action, with the growth levels of... What did they forecast it up to, 0.9 or something?
Yeah, so it's better. Look, all of them, capital markets went better. SA Inc. went much better. We saw that in the just before the show. The rand is better, bonds are better, including Eskom bonds. So this was well received, but I think the reality is it's well received versus what could have been. And I went on social media last night, sort of giving my very glib forecast. And I've been pleasantly surprised. I suspected that in some shape or form, there would have to be a higher tax bill. That hasn't happened. In fact, the exact opposite has happened. We've been given bracket creep relief, whatever the opposite is of fiscal drag. And there is a real tone of intent about the wage bill.
I think
perhaps a comment from you.
Maybe it's a good thing actually that there's some realization on the realities facing South Africa, that perhaps to get your fiscal consolidation, it's no longer really possible to do it through tax revenue increases. So that introspection has to come from expenditure adjustment. And this is the first step, I think, in that expenditure adjustment. I'll give you an example. Brazil, you probably see quite a number of similarities between Brazil and South Africa. 5 years ago, Brazil was at the same rating with South Africa, investment grade, BBB-. Then Brazil lost its way faster than South Africa. And I think the rating has now bottomed at BB-, right, which is lower than South Africa. But Brazil also had a new dispensation, a new political leadership in government. But what they've done now is to actually go ahead with a difficult choice on pension reforms. Right? And you're actually seeing, I think the numbers are still weak, but you can see some improvements in the debt, in the fiscal. And what we then did in December last year is to provide a positive outlook on Brazil, noticing the difficult pension reforms that have been done by the leadership there, which helps to then put your fiscal and debt on a sustainable path. So it's important that the path that South Africa is going on to engage with the unions, to find that expenditure adjustment that can at least result in fiscal deficits coming down, debt to GDP stabilizing. If that can happen, then perhaps you could see the trajectory of ratings being different. So it's not all negative, but it's about following through on the commitments put on the table. All
right, so let's discuss the State Bank. We got a bit of detail. I don't know how much it was for you guys here at the table to have an idea of what the state is looking to do with the State Bank, but your views on that and exactly how they are hoping it will work. Kerry?
I think there wasn't much detail on the State Bank, but certainly from what I gleaned was that obviously they're looking to develop a fully fledged retail bank. I'm not sure, I struggle to understand the rationale for the State Bank. I'm not sure that it's where our efforts and our expenditure should be going. I'd have to be convinced, as a market participant, I guess, by government that we require a State Bank. I think it's similar in some ways to the sovereign wealth fund, that they're talking about. But I think, it's a separate matter, obviously. But I think it requires some justification. There's so many things that we need to spend our money on and inspire confidence with in order to bring that to the market. We need confidence. I mean, going back to Tonda's point around Brazil, you've certainly seen that some of the confidence is creeping back into markets because they are showing ability to reform and ability to make the hard calls. And when you get confidence combined with value, we were just talking about our small and mid-cap sector, Adrian, now while we were waiting outside, then that's the catalyst for a re-rating in terms of asset prices, both currency and risk asset prices. And that's really what we need. And I think this was a great first step. I'm not sort of knocking today's budget. There was a lot of confidence that came through, I think.
And a lot of re-rating on the JSE. It's about the sustainability. Just one last point on that State Bank. Adrian, do you get the rationale of where the state is going here? Look,
it's hard. If you follow the commentary that has evolved over a couple of years around this, you can see I think the political imperative behind it. But the commercial imperative is harder to reconcile. If it's big industrial, then that already exists, and you've got that in the form of the DFIs like the DBSA or DTI, IDC, sorry, and if it's a retail bank, I'm not quite sure what skill or expertise the state would bring in a broad umbrella that the private sector doesn't already have. We might have a very well populated, but perhaps not sufficiently representative commercial bank sector, but there's enough there.
Maybe it is that in terms of the improvements of access. And they did comment on, or Tito did mention the fact that he's possibly looking to merge national and local development finance institutions.
Then my appeal would be this: can we please insist that this is not a bank that lends for consumption?
Right.
And that it lends for building country fabric and social fabric, housing, education, small business.
Sure, Gardner?
No, from a ratings perspective, I think it's important that whether it's a new bank that's state-owned, that it doesn't become a fiscal risk. As long as it can be run successfully and not a fiscal risk, then it's good for the ratings.
Right. The Sovereign Wealth Fund, we finally got a figure on that. Is it $2 billion? Your views on that, and also the proposal in terms of funding mechanisms of that, quite a number of things put on the list. But from a ratings perspective, our plans for Sovereign Wealth Fund.
No, Sovereign Wealth Funds are good. They prevent savings pot that can be used during a rainy day. But the reality of South Africa is that South Africa cannot save much. What is happening right now is borrowing, and borrowing a lot more than previous years. So yes, it's a good idea, but I think in reality it's not going to help in the near term. Yeah, it's more important to try and reduce rising debt servicing costs than the idea of a sovereign wealth fund in the now. But it's good for medium to long term. Because
they were talking, the minister was talking about, some of the funding mechanisms being possibly the proceeds from a spectrum from the telecoms industry. There's gas and petroleum there as well, and other measures in which he's hoping to fuel savings. But Adrian, Kerry, your views there?
Yeah, I mean, look, a sovereign wealth fund is all about intergenerational equity, making sure that the resources we sell today, whether it's spectrum or physical precious metals, don't belong to today's generation, they belong to those that come after us as well. And that's sort of one basis for a sovereign wealth fund. The other is the rainy day, that in bad times you've got this bucket you can go to that can bail you out. But the reality is South Africa is short of funds. So this is a little bit like taking something from the left pocket and pretending to the right that there's more than there really is. So the maths doesn't quite add up. But if we are going to build a sovereign wealth fund, can we make the first source of funding the proceeds of crime?
They have ramped up the units. The NPA there has been given quite a bit of money to hire, was it 800 new investigators and a couple of hundred prosecutors.
Can we go after those people and get that money back? Because that is our sovereign wealth.
Okay, so which means the announcements around, I think there's movements regarding the Zondo Commission. In fact, that is what the NPA will be working on, some of the names that were mentioned in the Zondo Commission being held accountable. So this is something that inspires confidence for you. Adrian, for you, Kerry?
100%. I mean, I think again, I can't sort of reiterate that enough, and I agree with all of the comments around the sovereign wealth fund and how it gets funded. Great idea, but I think other things, again, we're running a deficit, other things to spend the money on right now. Hard to save for a rainy day when we've got to pay down some of that debt, spend on infrastructure, etc. The expenditure allocated to NPA, great. Properly confidence inspiring. I mean, a lot of the road shows that I do overseas, it's funny, I always remark back how that whenever I get into a taxi and I'm speaking to the taxi driver and he asks where I'm from, he always says to me, listen, are they ever going to put anyone in jail or collect any of that money? It's just so well known overseas that we're spending a lot of time and money on these commissions, which obviously we have to have. They're a good thing, but again, time for action. So completely agree. If we can get back some of those funds, then happy days.
And just in the interest of time, as we've got around 6 minutes or so left, what should have been in this budget, or what could have been in this budget to really get a much more positive reaction from all corners, from the investment community, from the ratings community? Tonga.
I think what's important to see as well is that there's a new reality that growth is now going to be around 1%, right? And the weak growth is actually a result of the challenges you see on the public finances. So it's important to address the issue, not just on the expenditure adjustments, but also on growing the economy to a higher level. If you see the weaknesses in growth, they are emanating from, one, the energy supply, which we've discussed, and two, the contributions of your mining, manufacturing, the labor-intensive sectors. I don't think that there was enough around direct measures that are more immediate to try and enhance sectors, to bring in new money, new investment that can spur the economy to higher growth. So in as much as the focus is around the numbers on the fiscal side, but they are also a function of a poorly performing economy. So it's important to get the labor-intensive sectors to start contributing to growth, and that's investment. And I think the new administration, well, they're no longer new actually. It's been 3 years now in 2020.
New old.
So that some of that investment starts to come through, and we can see unemployment reducing, we can see the economy growing. Especially the labor-intensive mining, manufacturing need to grow along with the overall growth in the economy.
Right, so not going far enough to spur investments. What is interesting is that, I mean, we've had around 2 investment summits. I think we're going to have the 3rd one this year, and concurrently we've had a lot of companies announcing job cuts as well, so one has to wonder there. But Adrian, for you, what should have been in this budget, perhaps that could have inspired a lot more confidence and a lot more re-rating on the stock markets?
I think to Tonga's point, 1% growth just isn't going to cut it. It has to get higher, and that growth needs to be inclusive to square up to unemployment and in particular youth unemployment, which is a glaring social ailment facing South Africa. And if you're in search of tax revenue, the greatest source of that tax revenue is the buoyancy that will come through higher growth and new jobs. So many aspects of this are about furniture rearranging. What I would take the greatest confidence from is commitments to actual numbers and specific timelines. And that gets us out of the business then of saying the right things and committing to deliverables by dates.
Kerry?
I think just to add to that, I think the guys have summed it up well, but just to add to that, I think the one thing that we haven't spoken about now was Finance Minister's indication that they'd be looking at corporate tax cuts as well. And again, I think it's a confidence-inspiring mechanism, and it's something that will indirectly, hopefully, allow companies the confidence to grow and employ more people and spend more money, which obviously, hopefully then has a positive impact on the fiscus going forward. So I think that was sort of another useful area. But yeah, they've addressed one half of the balance sheet, I think, in this particular budget around shrinking expenditure, stopping wasteful expenditure, etc., etc. There definitely was possibly a lack of detail around how they're going to get the growth in the economy. You know, how do you stimulate it? And obviously that's a conversation going on all around the world, and you're seeing lots of pro-economic growth, fiscal expenditure and monetary easing around the world, and programs that seem to be working. So, you know, we should perhaps see more of that, you know, which raises a whole nother contentious argument. You know, how do you do that without taking on more debt? You know, and obviously it's expensive already and it's growing fast. But, you know, do we spend more on infrastructure, on employment, you know, cut down the wasteful expenditure and rather direct that spending in a meaningful way to pro-business and pro-growth areas of the economy?
Sure. I mean, I know that there were plans to spend a bit more on infrastructure with the Development Bank. They got some work cut out for it. But just a quick one as we are out of time. We've seen a not so bad budget. We've seen a positive reaction on the markets. We want to know from investment managers like yourselves, do we take advantage of the opportunity now that South Africa is not as bad as we expected and buy SA Inc. stocks like quite a lot of traders have today?
I think that you know, South African stocks are showing good value, and I think what markets need, as we've spoken about quite a lot in this show, is confidence to buy. You know, when that confidence is there, then we will see a return in growth in prices, and that will inspire more people to buy those stocks, not only locally but globally as well. And obviously, you know, we're on the back end at the moment of quite a fearful environment globally with corona. Not all of it is South Africa driven, I think, as you know, you mentioned and Adrian alluded to in his opening statement. You know, if we can just get some emerging market tailwinds again, and we are receptive to flows of that international capital by doing the right things at policy level, then yeah, I've got no doubt that South African asset prices can grow quite nicely.
All right. Adrian, you putting more rands in your portfolio after this budget?
South African assets are well priced. I think Kerry's nailed it, that it's about the confidence that we can have some certainty or surety in that valuation. But taken at face value, South African assets are very well priced.
All right, nice and cheap. Tatonga, final word from you. And also, perhaps if you can just touch on the impact of the coronavirus potentially on South Africa's economic trajectory.
Yeah, okay. The first point is that regarding about the pricing of assets, I think South Africa does not have a funding problem. They are getting all of the portfolio inflows in, portfolio equity, portfolio debt. The real challenge is getting FDI. If FDI can come, it's much more long-term and longer lasting. That can help the economy. Yeah. On the coronavirus, I think our best case assumption as S&P is that if it is contained by March, which is next month, then the effects on growth for many of the emerging market economies is going to be contained. Sure. Which is where we are today, but we are monitoring, I think, the situation to see. But the direct channel is through the commodity prices. I think we've already seen oil prices coming down and some of the prices like copper. So South Africa's commodities prices could also suffer in the event that it becomes much more of a, let's say, a pandemic. Then it becomes much more challenging. But I think as of now, it's still developing.
All right. Okay, gentlemen, we'll have to leave it there. Time surely does fly fast when you are having fun. Of course, I was joined in studio by Kerry Finn, the CEO of Alpha Wealth, Tatonga Rusiki, the Sovereign Wealth Analyst at S&P Emerging Markets, and Adrian Saville, the CEO of Cannon Asset Managers. And that's a wrap for our Budget Day coverage. Thank you so much for tuning in with us. It's bye for now.